Hi, this is Mark with my analysis for the week commencing the 4th of May. As a species, we appear often to be very stupid and no more stupid than investors, as we have seen in recent weeks. We started the month around here, and at that time the financial world was coming to an end. Everybody piled in, the press piled in, frightened everybody to death. People dumped their stocks as a result of which, and yet yesterday we were back to exactly where we started. And you have to realize that this is all a rigged game. It is all about frightening the pants off people. And yet when we're back up to here, I still have a longer term view. I think that the stock market are due a major correction. It wouldn't surprise me if we see a move on the S&P back up to 6,000 and NASDAQ move higher as well. But then I do anticipate there will be a crash. But in the meantime, just try to balance things out. And I'm going to show you that in a second. Now, I'm going to come on to all of this in a moment. And I say, we had all of this, the Guardian, left-leaning paper in the UK. Well, that was it. Trump's nonsense. 2.5 trillion wiped off Wall Street. Well, it's back again today, is it? And then I was talking in the middle of the month, the 9th of April, a week after all of that, the Trump crash, and my portfolio is up. So during all of this chaos, I didn't have any pain. I was in front, and now I'm in front from the stocks that I bought in the downturn. So the point I'm trying to make is that now is the time to be thinking about how to protect yourself going forward, not just in looking for forex trades, but if you invest and you are looking and thinking of what to do, not to do next, and what and where, now is the time to be thinking about it. Now, the reason why my portfolio was up was because I have been buying gold and gold miners heavily since 2022, which I have shared with you here since 2022 and on numerous occasions in my live training sessions and my investing analysis section. So if you go back into here, if you go into the home page, and you scroll down, when it loads. So you've got the three most recent posts here. I talked about forex, gold, silver, and Bitcoin a couple of days ago, and had a decent trade or two out of that. And then if you scroll down here, you can go to my investing corner and click on that. And this is where I'm talking about everything in the financial world and what I'm looking at in different sectors and crypto and stocks and metals, etc. So, as I just said, we have opportunities in all markets all of the time, and it's a matter of being calm, cool, and collected, and to be able to sit and say, well, okay, what's going on? What am I going to do next? And once again, if you have a look back through previous posts. And then on the 23rd of April, I posted how to join the dots. I was talking about how markets move, and I show you this every week, and I'm going to show you in a moment how money flows into the dollar, out of the dollar, into stocks, into gold, into crypto, etc. And then during the week on the Wednesday, I posted the update from the live training session last week. So I shared an update on my high yield ETFs. My high yield ETFs so far in the first month or so I've been in them are paying at the moment an annual return of approximately 43%. Yes, you read that correctly. So their opportunities were there as well as. So my crypto was down, my gold was well up, my high yield ETFs were up, some of my stocks were down, but overall I was in profit and I had a very good month. I also managed to make some profit from forex as well as. So you need to get in the habit of reading through and going back into it. This is the crypto section. This was again all about catching the right cycle at the right time. October 2020, why I believe that crypto could be the best investment in your lifetime. And lots of things in there about crypto. And if you want to take this further and understand what I do, then you can go down here and have a look at my other website, the one where I share all my investing in a lot greater detail. And I also share my portfolio, what I'm buying, when and where and why. But there's lots of stuff here in Forex Mentor Pro. Now, one of the things I sent to my investing group the other day, why I was bullish on Bitcoin. I showed you guys technically why I was bullish on Bitcoin, but fundamentally, the things that are going on in America since Trump has come in, this is Howard Lutnick, Commerce Secretary in the USA, and the opening comment in this discussion from a couple of days ago is that Bitcoin is the new gold. So very positive, and this is not something new with this guy. He has been very pro Bitcoin for a long period of time. So that's going on in the US. And then you've got the new SEC chair. So Gary Gensler has gone. He resigned on the morning of Trump's inauguration. He was a little and he was put in by Biden to strangle crypto. And the Americans now have the team around Trump are all very pro crypto as well as. And so the new chair, Paul Atkins, gosh knows why it takes so long. It's taken 30 days to get him through the process, but he's now in charge. And he says market participants are engaging this technology deserve clear regulatory rules. And that's what they've been after all along. And he says innovation has been stifled for the last several years due to market and regulatory uncertainty. Unfortunately, the SEC has fostered. So you have a very pro-crypto group in America. What do you think that's going to do to Bitcoin? And all of that is covered in my other website. So if we have a look at what was going on last week, and before we come to that, no, let's look at that now. So we have a major area of decision making at the moment. You have the US dollar index has stopped at 100 to teasers, and I'm going to show you all of this on MetaTrader in a moment. Other currency pairs, so the Nasdaq has broken a little higher. It's broken the 200 EMA and is sat above it, and it's sat just above the major level of 20,000. And the S&P that we've just looked at has broken the 200 as well, and the trend line, so it looks as though we're going north. Now, I was reading a lot of reports over the weekend. There was very low volume for these moves, so we're really going to have to wait and see the next day or two what's happening next. And the interest rate on T-bills in the US is going up, which is not good for the US. Gold is dropping. So if you didn't hedge your portfolio last time and you went through all the fear or maybe sold and panicked in the crash, then consider gold as a hedge for your portfolio. And again, I showed you the other day, 3,100 was the first place I would be interested to buy gold. Silver equally. I have more silver than gold. And 31 and 30 are the areas I'm looking to add to gold and silver. And then the miners. So this is one I've shown you lots of times. This one went up 260% last year. It's down at the minute. Oh, this is terrible. This is the end of the world for the gold miners. Well, let's have a think. A month ago, when everything was going on up here, the miners were doing very well. Now is the time to be thinking about doing something like this. Now, this is Bitcoin. I'm going to show you on MT4 in a moment, but we had a clear triangle flag pattern on this that I showed you, which suggested an explosive move, which is what we have seen. And then most of the other cryptos have broken trend lines and are currently being held by the EMAs. I have bought more of each of these recently and continue to accumulate, because this to me is an accumulation phase. But technically, if we get a breakout from these areas, we could well be on for a pop. And then MicroStrategy, oh terrible, MicroStrategy crashed beginning of April. I wish I'd never bought this thing. Oh dear, well actually now MicroStrategy is up 70%. Those who took advantage even here, this was where I showed my investing group, the more conservative entry, is up 25%, which is roughly what the S&P makes on an average good year. Same for coin. And I'll show you quickly one or two other of my favorite stocks. And then, no, actually, these are not the favorite stocks. These are the blue chips that I don't normally bother with, but they were cheap. I mean, you look at Google, you could have said 2 months ago, it's way too expensive. Well, then it dropped 30%. So now the sales are on. So I bought some Google in here, and I had an order in here, and I'm slightly in profit. Palantir, on the other hand, I did buy in here. So I bought here, and I bought again here. So I am cost averaged in here, and Palantir is up 60% in 3 weeks. So these are opportunities. Now it's at a double top. I am going to remove some of my initial stake because the probability is it will probably struggle or possibly reject here again. But I am in this for the long term. Meta, I bought some Meta the other week down here, and again, it's up. I don't know what Meta's up in the last week or two. That's only up 20%. Nvidia's about break even for me. I bought here and here. Microsoft did very well out of this one. I bought Microsoft here, and then I bought it again here the other day. So Microsoft is up 20% in the last few days as well. Amazon, I was buying Amazon. I'm about break even with Amazon. These were different levels. Amazon may struggle more than some of the others because of the situation in China. And then this is that yield max I was showing you. So Tesla at the moment, for a Tesla related options system, is currently paying a distribution, i.e. dividend, of 102% per year, which is nuts. I have a portfolio. I have tried to balance it. I have 12 different ETFs. And as I say, at the moment, they are averaging out at around 43% annual yield, which is nuts, but it's worth exploring. So we look then about what's going on in forex and around the world as well. And mark to market, as ever, is a great site to look at. And then also in here, he was hinting about that this is not going well for China either. And he's talking about the dollar index broke, and he also pointed out a head and shoulders pattern in there, which once again I hadn't spotted, and I don't know even if our expert Ashley had spotted the head and shoulders pattern on this one. And he's talking about the different currencies and what's going on, etc. And then China didn't want to blink. Who's going to blink first? Trump is a fool with all these tariffs. Well, apparently they're now starting to get some of a bite. I read yesterday that some of their ports are virtually empty, which are normally full when they're exporting. They're laying workers off. There are workers not getting paid. And so it's not just confined to the pain in the US, and it's only been a month. This is the important thing to think about. It's only been a month. But China suddenly on Friday, as per market to market, came out and said something a little more positive about perhaps they may be willing to talk. And at the end of the day, of course, they're going to talk. So what happened last week? And this again is the stupidity of all of this. The news last week was not great for the US. And there was a drip during the week of negative news. So the JOLTS job openings were down. That's not good. And non-farm unemployment was worse than expected from the previous month and much worse for this month. The advanced GDP growth figure was revised up a little bit from the month before, but was much worse. And then employment cost index and then core PCE was revised up last month. Unemployment claims. So unemployment claims were higher than expected. ISM manufacturing did go up a little bit, which is positive, but still anything below 50 is negative. Average hourly earnings for the US, worse than expected. If people are earning less money, they spend less money, which is bad for growth. Hence, you see the situations where growth is down. Non-farm payroll, woohoo, great. Okay, we're 40,000 jobs more than expected. So the amount of people claiming is significantly less. Oh, well, hang on a minute. We've revised the previous month and there was 40-odd thousand there as well. So it actually came out as expected. So the markets chose on Friday to interpret the news in a positive way. Now for the week ahead. It's a bank holiday in the UK on Monday, so the pound will probably be slow. Important news for the US, ISM services PMI, if it goes below 50, that is bad for the US. And then we have the big event. Well, if you trade in the NZD, be careful with the employment news. And then the big event of the week is the Fed fund rate. And again, you don't take trades for me, in the London session on Wednesday onwards, I wouldn't take trades because this is going to rock the markets. And it's not just the rates. So they're not expected to cut rates. What if they do cut rates? That could be a shock. What if they put them up? That would be an amazing shock. So that comes out, and this statement comes out, and then there's a press conference. And Powell is going to be quizzed heavily about why he's not cutting rates. President Trump wants him to cut rates. President Trump wants rid of him. So that is an opportunity for chaos. So step back, let the dust settle and see what goes on. If you're going to trade the pound, then be careful with the pound because the bank rate is out. And it's anticipated they're going to cut rates by 0.25%, still very high in the UK, etc. And then on Friday, we've got Bailey Speaks and CAD employment checks. So loads and loads of things going on. Let's go back to having a look at the world, financial world in total. So as ever, I look at where money is flowing. Is it flowing into the dollar or out of it? Is it flowing back into stocks? Well, yes, it is. So it looks as though we're back into a risk-off environment. Gold is dropping, so that then suggests that money is flowing out of the safe haven of gold into stocks into crypto. And we saw that with Bitcoin. Bitcoin made a significant break higher. I showed you and I explained in a live training session a month or so ago, I bought more Bitcoin at 76,500, and that is up 26% in 6 weeks. So again, there are opportunities all the time, all around, if you open your eyes and don't just focus on the stock market.